Go take your pen and your book and sit down because now you're going to be learning with the best in the business. So, guys, this is my new number as I indicated on my status that, guys, I was robbed. Which of guys, it was a tragic thing, sort of like weird because it's the second time, I think it's the second or the third time that's happening to me. So, as you can see, it's 0766107082. So I'm currently using my older phone. So guys, welcome back to another video of trading with the best in the business. Those who are part of my mentorship and signals, text me on this number on WhatsApp, and then we start operating. Those who are not part of the group, currently start being part of the group and everything. So to everyone that I didn't attend, I'm going to attend you because I have problems. I'm a human too. I do have problems. So the worst thing you can do is just start talking nonsense about me because I don't actually just do things just like that without an explanation. And at the end of the day, I've never run away from someone or everything. I deal with everything the way I have to deal with them. I'm a man. I know that. So it's 0766107082. So today I'm going to be teaching you another valuable information. I'm going to teach you how to swing US30. We're currently starting on a daily time frame. So this information is one of the information that you have to be part of the group in order for you to understand it. So if you're not part of the group, you're clearly losing. Something I'd love to teach about the market is clearly the momentum. Why is gold or why is US30? I mean, I'm sorry for that. Why is US30 pushing to the upside? It's because clearly the momentum is to the upside. If you can check from here to here, when it's time for the market to push higher, it pushes with pressure. All right, it applies a lot of pressure. So let me just put two right there. But when it's time for the market to dip, it doesn't apply a lot of pressure. What does it do? Apply less pressure. But when it's time for it to push to the upside, what does it do? It gives you a very big push to the upside and everything like that. As you can clearly see, it dipped a little bit and then give you what we call a very big push to the upside. All right. So I hope everyone is listening and listening attentively. As I indicated, go take your pen and your book and sit down because now you're going to be learning with the best in the business. So currently, guys, you can see that as I indicated, that's how you identify momentum. As I always say, all those break of structures and change of characters, they clearly mean nothing. All right. Because let's just say now the market is trending to the upside. All right. The market is trending to the upside. All of a sudden, it gives you a low. All of a sudden, you think it's going to continue high, and then all of a sudden, it breaks this low right here. It gives you another low, and then you'll be like, okay, now we're having a minor change of character or a change of character, meaning that we're going to have a point of interest right there, and then the market is going to push down. But look at what the market does after breaking this low of yours. After breaking that low of yours, the market blasts to the upside, right? So that clearly means those break of structures, they don't really determine the direction. Those change of characters, they don't really determine the direction. They just there to fill a certain point, do whatever it has to do before pushing to the right direction. So the only thing that determines the direction is the momentum. When the market is time for it to push to the upside, right? It pushes with pressure. But when it's time for it to push to the downside, it doesn't even give more pressure. It's just like applies less pressure. When it's time for it to push, it gives you big momentum and all those type of things. So that's how you understand the momentum. All right. So I repeat again and again, that was my number, guys. Go text me on WhatsApp. If you really want to learn with the best, go to WhatsApp. Those new members, I'm sorry, guys. Things happen. But text me on WhatsApp and then we continue. Before you start calling me a person I'm not, which of it might get me pissed. However, let's continue. Something you need to learn since you're trading with the best in the business. Before the big moves happen, the market takes out liquidity. Check this out. This low was taken out. After the market took out that low, what did it do? It pushed even further to the upside. Check this one. Here, there's a liquidity that was left out right there before the market pushed even further to the upside. First, it took out that liquidity. I'm sure most of you don't know it, guys. Even your mentors, they don't know these things because I believe most of the people, they're just in it for the money. They are not checking each and everything when it comes to the market. You can see this low right there. Before the market pushed to the upside, it first took out that low right there. So it's very simple. Each and every time that the market wants to give you a very big push to the upside, first it has to take out liquidity. So you can see this week right there, that was liquidity being taken out. And then after the market took out that liquidity, it blasts to the upside, right? So clearly now you know that before the market moves to the direction that it is supposed to move to, I'm sorry, guys. I'm trying to be as fast as I can. Before the market pushes to the direction you want it to push it to, it first has to take out the liquidity. So the first thing that you've learned today is the momentum. All right. The momentum is determined by all those big pushes to the upside and all those type of things. The break of structures and the change of character, they don't really mean anything. They're just there maybe to complete temporary moves on all those type of things. All right. So sometimes they do mean something only if they are aligning with the momentum. I'm sure you're listening to that. If they're aligning with the momentum, they clearly mean something even bigger. Who says trading is very hard? Trading is not hard. So let's just focus on this market right here. Let me just divide somewhere around there. Or many people can be like, okay, now I'm choosing the right spot for me to divide. Let's just push it to maybe somewhere around there, right? So clearly we know that the momentum is to the upside, right? We're just looking for a very clean, good setup, and then we take it from there, all right? So clearly when we move to the previous market, you can clearly see that, okay, what is the market doing here? The market printed this high, went down to print this low, went up to print let me just do this, went up to print this high, and then pushed down to print this low, pushed up to print this high, printed this low, printed this high, printed this low, and then obvious on and on and on and on. So this is the catch. You have to understand that each and every move has a reason. I'm sure you understand that. Each and every move has a reason. Take this for instance. The reason that the market pulled down to this level, it was just to take out this liquidity and fill a certain point or fill this type of imbalance and then continue pushing to the overall direction. I'm sure you understand that one. Very, very simple. So let me just do this and do this. All right. The reason that the market pulled, let me just take this guy out. Now we know where we have to start and all those type of things. The reason that the market pushed to the upside, it was because it wanted to take out these high and also continue in the upside direction. That's why it blasted to the upside, because the momentum is to the upside. All right. So it's very simple. The market printed the high. Why did the market print a high here? It was because it was time for it maybe to breathe a little bit so that it can find the momentum to push to this level right here to fill a certain imbalance or take out the liquidity. I'm sure, guys, you're listening to that because I don't think I'm really that fast. All right. So the market broke this high, and then obviously it has to come back to feel a certain point right here, and then continue pulling to the upside. Okay, as you can clearly see that this low was left out, but then later in the future it was taken. What we call it was taken out. All right. So this low that was taken out, it has to be respected. All right. So the only way the market that respected this low, it is that after this break, the market gave you what? Gave you a respect. Let me just go back to the chart. It gave you a respect around somewhere this area right there. All right. Let me just do this. It gave you a respect around. Let me just maybe do this around that area right there. All right. So you can clearly see that. Okay, what did the market do on that area after giving you this break right here? The market went up to do what? To take out these high right here. As you can see, this high right there. So as I usually say, listen attentively, guys. Listen attentively. If the market gives you a low like this, that's a clear change, or maybe that's a clear break, and then goes up to break the high that created this low, it is not actually going to break that high. It is going to just sweep a little bit and then push to the downside. If you see a sweep of the high that created a low like this, a clear break of structure like that, clearly the market is going to respect after taking out the high. All right. So I'm not sure whether you understand that, but I'm sure many of you are going to understand. So sometimes on other scenarios, it's not going to respect for a long time, right? Because the momentum is not to the downside. It has to respect for a little bit and then push to the upside. All right. So you can clearly see that this high was left out, but as liquidity, This one and this one, they were taken out, including this one, and then the market pushed to the downside. Why was the market pushing to the downside? It's because we had this break right there. So the market clearly has to push to the downside to fill respect that break before pushing to the upside. So as you can see, the reason that the market pulled to the downside, it is because it dropped liquidity right there and then had to pull to the downside. All right, and only because of this break right there. And as you can see, push, pull down, another push, taking out the liquidity. You can clearly see that here. Let me just show you a certain thing. You can clearly see that here, guys. Where sort of like this level right there, that level right there was taken out. All right, after that level was taken out, it means a certain high here was supposed to be uh respected. A certain high like this one was supposed to be respected around there, so the market just took it out. Also took this one and took this one. So here, because of this one, the market took this one, and then after taking that one, it pulled to the downside. So clearly here, we can see that the scenario is very simple. After the market just took out this high, it definitely has to pull to the downside. Why? Is because I can clearly see, if you can push down to the entry time frame, you can clearly see that here there was a minor change of character. So if there's a minor change of character, it means here it has to be respected a little bit. However, the market just came and blasted here. So meaning that after that blast, the market has to pull down. Why? Because it gave us a small legit change of character. If you're not believing me, let's push to the downside. Let's push to the smaller time frame, or let's just push to the 1 hour. But these things clearly happen to the what we call happen to sort of like the what we call the 15 minutes and all those things. You can clearly see that this low right here gave you a clear break in this low somewhere around there. So meaning that if the market pulls down to take this one out, that's a clear minor change of character. So this proves that I know what I'm talking about. All right. So this minor change of character was supposed to lead the market into respecting this level right here. So what did the market do? The market did not respect that level, all right? And then after taking that level, it is going to do the very same thing it did after taking this level right there. It has to pull to the downside. However, it is not going to pull to the downside uh, more and more and more, because the momentum is to the upside, all right? So on and on and on and on. I don't want to even explain many entries. I just want you to see that swing trading is very simple, guys. It's very simple. You just have to align the liquidity. That's the most important concept. I'm really sorry about that. You just have to align the most important concept. You have to know that the types of liquidity that the market targets, it's sort of like the inside liquidity, wicks and wick lows and highs. Am I clear? The market targets the wicks, the rejections, inside liquidity, weak lows and weak highs. All right. So as you can clearly see, you can see that there was a wick here, and then we also had this break of structure right there. So the market pulled down to respect this level right here. Let me just show you. Pull down to respect a certain level right there. However, it left a wick. All right. After leaving this wick, that's a clear sign that the market is going to come down to take this wick. Why? It is because this break was supposed to result into the market coming into a certain lower point around here, a certain lower point around here. So the market just pulled a little bit down and then pulled up. However, this one was left as an inducement or liquidity, as you can put it like that. And then the market tapped into that liquidity and pushed to the upside. Very simple. You can clearly see that, okay, now we also had this break. Why did the market pulled even further to the downside right here? It is because of this guy. Just wanted to fill sort of like a certain point right there and then push to the upside, which of here you were just supposed to put your fib. Here I'm going to mix a lot of information, guys. I'm just touching there and touching there, showing you the reason that you have showing you why you have to be part of the bank trading academy. Put it into that low. You can clearly see that, okay, this is a big imbalance. Obviously it's not going to be filled all the way. However, the market is going to fill some of it and then push to the upside. So here you can clearly see that it's very simple. The market was just doing the very same thing. Here we had a minor change of character, and then here we had what is happening right there, and then here we had another break right there, and then here we also had another small break right there. You can clearly see. So after that small break right there, the market was supposed to reach just here. However, because of this small break, the market went up to take out this guy. As I said, if there is a clean break or a clean change, if the market goes up to take out or down to take out that high or low that created the break or the change, clearly it has to reject and then pushed even further to the opposite direction. All right. And then you can clearly see that here we had a very good break of structure. However, here there was a very good opening. Here there was a very good opening, which of it was this level right there. The market tapped into that level, and then after tapping into that level, it pulled even further to the downside to fill some of this imbalance, and then pushed up. As you can clearly see that after tapped in, it gave you a change of character. So this one would have been a very good change of character. Why am I saying that? It's because it aligns with the momentum. Remember that. I said that already. So you're going to expect an entry right there. Why do you have to expect an entry while you can see that one, two, three other types of liquidity? So you can just simply put your entry right there. After the liquidity has been taken out, boom, you are in and in and in and in. So it's very simple. All right. We clearly see that, oh, okay, here we had sort of like clear breaks, and all those type of things. So the market obviously had to take out this guy because we had a small change of character where I'm sorry about that. We had a small change of character around somewhere here, and then the market tapped in right there, continuing with the momentum. And as you can clearly see here, we have this break right there. That break right there resulted into the market doing what? Pushing even further to what we call to the downside, and then doing what? And then push up. So as I usually tell you guys, come to me after this has happened. This guy is going to be taken out. This one has to be taken out, all right? Because I can clearly see that this break right here is going to result into the market pushing even further to the downside. However, there's a possibility that this guy too is going to be taken out. Why am I saying that? It is because of the concept that I told you. Look out for wicks, look out for wick lows and highs, look out for inside liquidity. And yeah, that's all I said. Look out for wicks, look out for inside liquidity, and then look out for what we call wick lows and highs. And then boom, you're gonna make money just like that. So guys, this was another video of trading with the best in the business. So if you want to learn more about these things, I'm going to teach you guys. I'm going to teach you. Here, I haven't shown you everything, but I just wanted you to see a couple of things. All right. Take it for instance, all these wicks that are being created later on, they are taken out. All right. Why does the market have to take this week out but not take this one out? Why did the market fill this week a little bit but not go will not come to fill this one? Obviously, it has to come to and fill this one. Trust me on that one, guys. So you'll come and update me when that has finally happened, which of it is going to happen. We don't even need to argue about that. So obvious this one has to be also taken out. This one was the week it was taken out. This one's, yeah, they were rejection or filled at the same time. These ones are, they're just good rejections indicating a strong low. So yeah, nothing hectic about them. They are not the type of liquidity I'm talking about. Talking about these guys right here. As you can clearly see, I'm talking about these guys. These ones, they are just an indication of a strong low. Why? Because there was also inside liquidity. These guys took them out. So clearly it was not just the wick. It was just the wick to take out these guys. So this one is another type of what we call type of the wick that wanted to take out these guys right here. So very simple, not confusing. And as you can see, this one was also just a very good high. However, because of the momentum, it was not going to be respected. It had to be taken out, even though it was just there to just take out these guys right here. All right. So yeah, it's very simple, just like that. So I'm sure you see, guys, I'm sure you see this week it was taken out. However, it was just another week that was just making these levels strong. However, it had to be taken out because the market was supposed to pull even further to the downside to fill this level. and then continue to push you in further to the upside. This was a week got taken out. This was a week got taken out. So I will teach you a lot as long as you're part of the community and everything. So guys, this was another video of trading with the best in the business. Signing out.